Good morning and welcome to Cris-Tim Family Holdings conference call, where we will be presenting the financial results for the first quarter of 2026. Before we begin, please note that this call is being recorded and that the recording will be made available on Cris-Tim's website later today. By joining this call, as indicated in the invitation, you have automatically and implicitly consented to being recorded. If you do not wish to be recorded, we kindly ask you to leave the call. I would like to mention that we might be making forward-looking statements today during this teleconference regarding the future performance of Cris-Tim's Family Holding, and that actual results may differ materially. We encourage you to review the disclaimer included in the presentation, which you can see right now on the screen. The disclaimer applies equally to all statements made in today's call. My name is Zuzana Kurek, and I am Investor Relations Manager at Cris-Tim Family Holding and your moderator during today's teleconference. I am joined today by Radu Timiș Jr., Chief Executive Officer, and Răzvan Furtuna, Chief Financial Officer of Cris-Tim Family Holding. Regarding the structure of today's call, let me walk you through the setup. First, Radu Timiș Jr. will deliver the opening remarks, highlighting key financial and operational KPIs and the progress made on the Investalin project. Following that, Răzvan Furtuna will present a detailed overview of our financial results, and we will conclude with an update on 2026 CapEx plan. Once the presentation concludes, we will move to Q&A session. Please be aware that all participants are currently put on mute. If you wish to ask a question, please kindly type it in the chat window, which will remain open throughout the management's presentation. I will be moderating the Q&A session, and for the benefit of those watching the replay of this teleconference, I will read each question aloud before it is addressed. Your questions today will be answered by Radu and Răzvan. Thank you for your patience, and now we can kick off the call, and I would like to invite Radu to share his opening remarks.
Ladies and gentlemen, good morning, and thank you very much for being together with us in this call to present our Q1 results. We are very proud to present the achievements that our company has made in these first 3 months. It is a first quarter which has surpassed also our expectations regarding the results. As you have seen, the results have been fantastic, both in terms of turnover, sales, and most of all, of course, profitability. We are continuing to grow in a market which is decreasing in terms of consumption. This is already the 4th year in a row that we are managing to increase results on all important indicators. This means turnover, sales, market share, and profitability. We are very proud to be able to achieve all these 4 indicators and to achieve growth in the same time. If we look at segment evolution, the cold cut segment, our most important segment of the business, has continued to grow significantly in Q1 with a growth of 8% year-on-year in terms of revenue and growth of 8% in terms of volumes. The ready-meal business has continued to grow by 3% year-on-year, which reflects a favorable product mix and sustained demand for the products. Here, in the case of ready meals, volumes have been stable in the first quarter of the year. As mentioned in the release of our budget for this year, we are focusing a lot on our premiumization strategy, focusing on growing brands with important added value and manufacture. If we look at the evolution of Matache Măcilarul, which is our second most important brand and premium brand, we are seeing a growth of 14%, and we expect this growth to be consistently maintained and enlarged throughout the year. Overall, the demand was broad-based, so it's a fantastic moment for us that we are managing to increase sales on all our distribution channels. This means key account brands, our own brands, private labels, export, and traditional trade. Our sales teams have been delivering superior performance in all sales channels, and we are very proud for this result. The highest growth has been achieved in the private label development and the export in terms of growth of turnover. If we look at the financial performance in the first 3 months, we have a growth of revenues of 7% year-on-year. We have a great efficiency in terms of cost side, with the price of raw material decreasing by 6% year-on-year, improving to 51% of sales. It is true that the market of raw material has been at a lower level than expected by the entire market, meaning that prices of raw material have had a positive effect on our result, as well as all the other types of inputs that we have purchased. Through a very disciplined purchasing strategy, we have managed to decrease costs significantly on all types of purchases. This is very important since all operational departments of the company have been delivering results under budgeted, meaning that they have had a very disciplined cost execution and overall bringing significant growth to the result in the first quarter. EBITDA has grown by 30% year on year, and the margin in terms of percentage has expanded from 15.6% to 18.9%. And net profit has been growing by 53% to 30.9 million RON, reflecting much stronger operating performance, lower financial costs as we have changed our financing structure compared to last year, and increased efficiency in production. If we look at the CapEx side, you have seen that last week we have published our CapEx plan for this year, as promised in our last call. The CapEx this year of the company is the biggest in the 32 years of history that our company has. It will reach 226.8 million RON. 175 million RON of this CapEx will be allocated to the Investalim project on the part of the Investalim Horizon 2026-2029. And 51 million RON will be investments in ongoing operations, especially in the production side of the company. The first objective of Investalim, meaning the construction of our new frozen storage facilities for raw materials and finished goods, is already at a 15% physical completion status at the end of Q1. Things are performing very well. Contractors are on schedule to deliver this objective by year end. The second objective, our logistics warehouse expansion, has begun at the end of Q1 and will be delivered by mid-October this year. Once again, the commissioning of both of these components are targeted to be functional and operational by the end of this year, bringing again enhanced efficiency for our company. If we look at the commercial side of performance, we have managed to achieve a growth of 8% in volumes. By comparison, the market we estimate to be decreasing, the overall cold cuts market in Romania, by 4 to 5%. So this is a much superior evolution compared to the market. The growth in terms of turnover has been at 8%. So basically, we are managing to achieve a much higher profitability with a price per kilogram, which is in fact lower by 1% compared to last year. This is exceptional performance, taking into account that we are managing to keep prices for our products at a very, very competitive level, and many times better than our competition, with a much higher level of quality. This is also one of the reasons why consumers are continuing to shift towards our products, to increase demand for our products. And nevertheless, of course, this year we will have the highest marketing budget in the history of the company. And as we see performance grow, we are continuing to increase this budget throughout the year. Operational efficiency gains, again, as mentioned before, have been supported by much better procurement conditions and enhanced efficiency in production, once again leading to a growth of 31% of EBITDA in the segment of cold cuts. If we look at the revenue by brands, all of the brands have grown, both in terms of volume and turnover. Cris-Tim, our main brand, has been growing by 6% in turnover, Matache Măcelaru by 14%, and the other brands that comprise our portfolio have been growing by 9%. Overall revenues have reached 235.6 million RON. These for the other slides, Zuzanna.
Ready meals.
Sorry, yes. If we look at on the ready meal side, if we compare Q1 26 to Q1 25, we have had a growth of turnover by 3%. a reduction in volume of 3% and the price increase of 6%. This positive price mix performance and the average increase in price has allowed us, of course, to grow EBITDA by 26% year on year, improving both mix and higher margin sales. If we look at the revenue growth, 1% has been achieved in our main brand, Bunătăți, and the other brands which represent private label has been growing by 8% in terms of turnover. There is a consistent portfolio expansion, and we expect results to accelerate in the next quarters in the ready meal division as well. If we look at the split by distribution channels, we see that the highest growth in terms of revenue, although our smallest distribution channel, private labels, has been growing with 13%. Our international key accounts branded category has been growing by 6%, and traditional trade as well has been growing by 6%. Once again, fantastic result, taking into account that traditional trade is a channel which is decreasing year by year in terms of volumes and number of clients. Compared to Q1 of 2025, the share of each channel in terms of our sales, we see an increase in private label from 11.9 to 12.9. We see a slight decrease in traditional trade, a slight increase in export, and a balance and stability in terms of international key accounts branded channel. If we look on revenues by market, the domestic market has been seeing a growth of 7. And in terms of the export market, we have managed a growth of 13% in revenue. I will invite my colleague Răzvan to present.
Hello, everybody. Thank you for joining our call today. I will go through the financial results, starting with the turnover. Obviously, main contributor is still Colcați. Basically, we have a 236 million RON turnover for the first quarter compared to 219 last year, 8% increase in sales. This, as Radu already mentioned, this was achieved, and this is really a very good, very positive thing. It was achieved mainly through volume sales. We had a very good quarter with higher sales on traditional trade and modern trade. Also, private label increase. The most important part, and I think this is a validation of our strategy, our most important pillar of our strategy for the next years, is the fact that the market looks like it's consolidating. The big numbers of producers should probably in the next years come down, and this is part of our strategy. This is one of the reasons we started to grow last year in traditional trade after I think a couple of years with very stable sales. And last year we had a 1.9% in terms of volumes increase year on year, and this quarter we had 9.6% in terms of volumes, which is a significant improvement versus previous years. On the ready meals, we have a 3%, which is mainly coming from the higher prices. A very good development of the sales in traditional trade also on the ready meals. Other business lines, other segments, it's also registering 8% increase, but this is a confirmation of our distribution model with dairy business, and it's also a 8% increase. It's half of it, it's related to the basis. Last year we just started in the first quarter. If we look at the EBITDA, obviously we had a very good quarter. It's a 30% increase in terms of absolute numbers, almost 51 million RON for the first quarter of this year compared to 39 last year. In terms of margin, this means 18.9% compared to 15.6%. Obviously, cold cuts contribution was the biggest, 41.5%, a 31% increase year-on-year in terms of absolute numbers, and a margin of 18% compared to 15% last year. Ready meals did great actually in terms of financial result, with a increase of 26% compared to last year in absolute numbers, and a margin of 28%. Looking at the OpEx, obviously, also Radu mentioned earlier, raw materials were stable and actually at a very low, at a low level compared to 2024 and the first half of 2025. We were expecting this year to see much more pressure from raw materials. It didn't materialize in the first quarter, and this helped our results. As you know, we have a business model which is assuming that we buy a lot of inventories. We build a lot of inventories in the first quarter, and basically we did this also this year. The percent in terms of percentage, the raw materials, the RON 137 million in total sales represents 51%, which is an improvement compared to last year when it was 58%. And in total OpEx and D&A expenses, the percentage is 57.3% compared to 61%. We had a increase in terms of FedEx employee benefits and expenses, a 14% increase, 62 million compared to 54 million. This is also a result of an increase in personnel, but also it's a basis effect, since our provisions for annual bonus, it's higher this year than it was last year. In terms of depreciation and amortization, we have an increase of 10%. This is normal, taking into consideration that last year we started in the beginning of the year to replace the fleet. Also, there were other investments done last year. In terms of third-party services, we have an increase of 23%, which looks big, but most of it, like 2 million RON, it's related to marketing expenses. Maybe Rad will explain that we started last year to build new categories, and we continued this year. This is why we have a higher cost on marketing. Other costs are flat, -2%. Nothing extraordinary here. Of course, we can mention the fact that in the first quarter, our utilities and the repairs and maintenance costs were lower than last year. This is something we will review during the second quarter. Of course, there are reasons to review our expectation for the next quarters based on the situation in the Strait of Hormuz. We don't have a clear view now. I think nobody has, except one person. In terms of, I think we can go the balance sheet. End of 2025, we ended after the IPO, including the proceeds coming from the IPO, with a positive balance. Basically, the net cash position was 6 million RON. Currently, we have a net debt of 27 million RON, but this is mainly due to our business model. This is why building our inventories in terms of raw materials means that we have to use a lot of working capital. It's like 60 million RON. If we normalize, the net cash position would be like 33 million RON. In terms of equity ratio, 61% end of 2025, 56% end of first quarter. Same story, normalized would be also 61%. Equity, the leverage is still low. We didn't start, we started the Investalin project, but we didn't draw anything from the facilities, financial funding facilities. So we have a net debt to EBITDA of 0.13. On the CapEx plan.
On the CapEx plan, you will see here a split in terms of the categories of spendings. 79.6 million are being invested in buildings, 144.9 million RON in vehicles and machinery, which excludes the renewal of the fleet that we have performed last year, 0.4 million RON in furniture, fittings, equipment, and 1.8 million RON in intangible assets. In total, we are reaching a budget of 226.8 million in terms of CapEx. And this CapEx, of course, the 51 million we have mentioned as investments in the current production, we expect to bring significant efficiencies to our results on the cost side. Overall, of course, we are aware that throughout the year, there may be some changes in terms of the expected results. We are very, very optimistic looking forward for the performance of the company. This is because we are continuing to grow and invest much more than all our competition. Basically, as mentioned, we are seeing significant growth in terms of volumes in the market that is decreasing. We are aware of all the headwinds that are happening around us. Of course, we are not talking only about the local economic situation, the inflation, political instability. You have the war in Iran. At this moment, of course, as we all know, the price of the oil barrel has been relatively stable, but we do not know exactly to what level it may reach in a few months if this war will not stop. Of course, we are working permanently and making scenarios, cost impact scenarios for every single growth of the barrel, meaning from each growth of $10 on the oil barrel. We have formulas that tell us at any single moment what the impact would be in terms of the cost side. First of all, of course, for the oil that we use for distribution, the petrol, the derivatives in which it is used, the packaging materials, and so on and so forth. Of course, we are seeing an increase in the price of utility costs, especially if we look at the gas. The gas price today has been growing by 70%, the level at which it is today compared to 3 months ago before the war. So there are specific expenses. We are very well aware of them. To be able today to say what is the impact can only be based on specific scenarios. As we continue to develop, grow, and create more efficiency in our business, we hope to be able to manage all of these cost increases and keep the pace of growth going forward throughout the year. I'm very thankful, satisfied with the performance of our teams. The organization is in a great spirit. All the employees and all the members of the company are very well motivated to deliver another fantastic year. So we are here to answer any other questions that you may have.
Thank you very much, Radu. Thank you, Razvan. This concludes the first part of our call. We will be now opening the floor for questions. If you have a question, please type it in the chat window and we will address them in order they are received. I see we already have some questions, but I would like to propose that we'll give you 1 to 2 minutes to type them, so then we can move smoothly through all the questions. We are going to go on mute for 1 minute and we'll be back. Thank you. Thank you. We can now start the Q&A. The first question is, how sustainable is the growth from Q1 2026, especially in the current global and local context?
Once again, as mentioned, if we look at the overall picture of the market and consumption, the spectrum is not optimistic. However, we are in a market where we are growing much ahead of our competition, and we are gaining market share from our competition. We expect that the current growth will be broadly sustainable throughout the year.
Thank you. The next question. You had very good numbers for the cost of raw materials, weight and sales in Q1 2026. Are they sustainable for the whole year? How do you expect the average numbers for 2026 to look like in terms of raw materials to sales?
Very difficult to say. Generally, even for Q1, as mentioned, we expected prices to be higher, and in fact, they were lower. So if you look at the average carcass price for pork, especially in Q1 compared to last year, the price is lower, approximately 20 cents lower on every single kilogram of carcass. For the moment, what we see at this moment that we are discussing today, we are not seeing a increase for the moment in price of raw materials. So going forward a few months, we expect prices to be relatively stable. But of course, we see a increase beginning probably towards year end. It's just a question of time, as today's pork prices are significantly lower than the past 2 years.
How much of Q1 2026 traditional trade growth of 6% year-on-year is due to volumes? Same question for PL sales.
Yes.
9% is.
So no, the growth of 6% is due to volumes. It's 1-to-1 the ratio, because in terms of selling price, the selling price has been flat. So we have seen growth of volumes in traditional trade by 6% as well. Oh, my mistake. Correction, sorry, 9.6% growth in terms of volumes.
And the price is lower.
And the price is lower.
It's a different structure of products, and the price is lower.
Yes. So volume growth has been significant as well in traditional trade.
Thank you. The next question. What was the average acquisition price for pork meat in Q1 2026 versus Q1 2025?
As I mentioned before, we can only look at the average European carcass price. Of course, we do not use in consumption whole carcass. We use a number, tens of different parts, of pieces of the carcass in production. So price, like I said, for carcass is roughly 20 cents lower compared to last year, same period.
The idea is that average price, it depends very much also on the structure, not only the product structure, but also the channel structure, because the recipes are different.
The more you grow sales in more premium categories of products, where obviously the meat consumption is higher than other products. Of course, the cost of and the quality, the cost of raw material is higher. But overall, what I want to mention, and it's very important, is that the whole market, including our competition, has been benefiting from a lower price of raw material. So this is generally applicable to all the important competitors. This is the reason why, if you look at the pricing of products in this category, in an inflationary environment, prices are very, very stable, comparable to last year.
Anyhow, from our perspective, in terms of management reporting, internal management reporting, we have all the data. But you have to take into consideration the fact that we use this strategy we have with the building of the inventories. At the moment, the price is very low. It's irrelevant to the difference between our raw material costs year on year. It's not. It should be much positive. Should bring much more positive effect into the result than what happened in the market with the pork carcass.
Do you have a general wages increase in Q1 2026? Did you have one-off bonuses paid in Q1 2026?
we began wage increases starting from Q3 2025 in specific departments. Then at the beginning of January, we increased our employee benefits and wages for most of the personnel in the company. This means that, for example, compared to the moment of 1st of July, when we know that the average minimum salary in the economy will increase, this will have no additional impact on our results. So we have increased wages ahead of the market, and generally we do that every year. In terms of, there are no one-off bonuses, there are provisions made in the first quarter for annual bonuses of 2026.
Also, please bear in mind the fact that there is a variable portion of the PEREX which is related to the volumes. So with higher volumes than last year and even higher volumes than the business plan we started the year with. This means higher costs in terms of variable salaries.
Thank you. What stands behind the decline of volumes on ready meals?
So the performance in terms of volumes on ready meals has been different. Like I said, traditional trade performed much better than key accounts. On the key account side, we've had some products in different clients that have shifted from brand to private label. So the retailers have moved the identification of the product. We expect these volumes to be recovered in the next period, as of course private label is different than brand. Brand is listed. Private label is done through tendering, where there is a competition, and of course, besides quality, price is a very important aspect on these tenders.
And whenever there is a price war in the market for private label, we avoid participating.
Thank you. We have two more questions. How much of the Q1 2026 private label sales growth of 13% is due to volumes?
It's all due to volume growth, because in reality, in terms of pricing on private label, in most of our clients, we have decreased prices due to the decrease in raw material, where clients have been asking obviously for a reduction in terms of price, and with a much more fierce competition, let's say, in this category, due to this advantage of raw material the whole market has been experiencing, raising the level of competition. So all the growth in terms of private label is due to volume growth.
Could you disclose your benchmark for pork meat value in Q1 2026?
No, this information is not disclosable.
Thank you very much. I see we have answered all of your questions. Thank you for joining us today, and I believe we can conclude our call. Next time we're going to hear each other is going to be after we publish our results for the first half of 2026, which is going to take place on August 20th. Also, please note that tomorrow we are having the general meeting of shareholders. We encourage all of you, in case you haven't yet, to cast your votes online using the eVote platform or join us in person. Until we hear each other again, in case you have any follow-up questions, you can always reach out to the investor relations team at investors@cris-tim.ro. Thank you all for joining us, and we wish you a great day ahead.
Thank you.
Thank you.